All right, it's time for the Eurozone economy's annual health checkup. We're going to take a look at the latest data from the European Central Bank, take its pulse, and see what the diagnosis is for the road ahead.
And you know what? The initial report from the doctor? It's surprisingly positive. ECB President Christine Lagarde recently came out and said that the Eurozone is, and I'm quoting her here, in a good place. Now, after years of ups and downs, that is a really confident thing to say. But as with any checkup, right, a clean bill of health today doesn't mean you're totally in the clear for the future. So the big question we're really digging into is this. Just how stable is this good place? And what kinds of challenges might be lurking just under the surface?
So here's our game plan. First, we'll look at that stable report card and see what's actually driving the growth. Then, we'll try to untangle this delicate balancing act happening with inflation. After that, we'll look at some of those storm clouds on the horizon, and finally, we'll get into the ECB's big idea for securing Europe's money in the digital age.
Okay, so first things first, let's dive into the good news. Because despite a pretty tricky global situation, the Eurozone economy isn't just treading water. It's actually showing some incredible resilience. The foundation, it seems, is pretty solid.
The headline number that got everyone talking was this one: 0.3% GDP growth in the last quarter. Now, that might not sound like a huge number, but it was better than anyone expected. It shows the economic engine is humming along. And get this, it's being powered by Europeans themselves, through people buying things and businesses investing.
So let's pull back the curtain a little. What's actually fueling this engine? Because it's not just about abstract numbers on a chart. It's about real people with real jobs who are spending money and feeling pretty good about the future.
And the thing is, the ECB expects this trend to stick around. What's really interesting here is that these projections have actually been revised upwards. They're forecasting steady, solid growth, all thanks to that strong domestic demand and a nice rebound in what the rest of the world wants from Europe.
And this is where it all connects back to real people. A huge reason for all this optimism is a rock-solid labor market. I mean, unemployment is hovering near a record low of just 6.4%. That means more people have jobs, they're earning more, and that stability, that's the bedrock for this whole economic picture.
Now, that strong job market leads us right to our next stop, inflation. And this is where things get really interesting. Because while the main number looks fantastic, almost perfect, if you look just a little bit closer, you see this fascinating tug-of-war happening. Okay, take a look at this. The overall inflation rate, that's the black line, it's stable at 2.1%, which is basically right on the ECB's 2% target. But look at those colored bars. See how they're pulling in totally opposite directions? The price of goods is cooling off, but the price of services is really starting to heat up.
And that's the key takeaway here. This split, inflation for the physical stuff you buy, has dropped to almost nothing, just 0.5%. But inflation for the things you do, services like going on vacation, eating out, transportation, that's climbed all the way to 3.5%. It's a real balancing act, with higher wages pushing services up, while smoother supply chains are helping to pull goods prices down.
Okay, so this brings us to the more cautious part of our checkup. That good place we started in, well, it's not on a deserted island. There are real external risks, some storm clouds gathering out there that could absolutely disrupt this economic calm.
So what are these storm clouds? Well, the ECB is keeping a very close eye on a few big ones. Geopolitical tensions, obviously the war in Ukraine, could send energy prices soaring again. You've got choppy waters in global trade, it's getting more expensive to borrow money, wage pressures are still pretty sticky, and even things like extreme weather could mess with food prices. All of these could potentially knock the economy off course.
So, you've got all these outside threats. What's the defense? Well, this quote from ECB board member Piero Cipollone really spells it out. He's basically saying that these very tensions are the reason why Europe needs a payment system that it can count on, one that's independent and, in his words, fully under our control.
And that is the perfect segue into the final piece of our puzzle, the ECB's big strategic play to future-proof the euro. And this isn't just about some fancy new tech, it's a direct answer to the risks we were just talking about.
It all starts with something you've probably noticed yourself. We just don't use cash the way we used to. I mean, look at these numbers. Just a few years back, cash made up 40% of transactions. Today, that's plummeted to just 24%. We are all moving away from physical, public money, and we're doing it fast. And that shift creates a fascinating new problem. A massive part of our economy, more than a third of what we buy every day, happens online now.
But in that digital world, there's no public, European version of a euro coin or a banknote. Every single digital payment relies on private companies, and a lot of them aren't even based in Europe. So you can see how the logic builds here. It's pretty straightforward. 1. Cash is on the decline. 2. Our online world doesn't have a public payment option. 3. That makes Europe dependent on outside players. So, step 4. The digital euro is designed to step in and fill that exact gap, a secure, public, and sovereign option for the digital age.
And really, this is the simplest and clearest way to think about it. The digital euro isn't some brand new currency. It's not a complicated crypto thing. It is simply the ECB doing what it's always done, providing public money, just like the coins and notes in your pocket, but built for the world we actually live in today.
And that leaves us with one last pretty big question to think about. Our financial lives are going digital. There's no debating that. Our wallets are already in our phones. In that new world, the real question isn't just about convenience, it's about control. So who do you want holding the keys?